Kitco News special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.
Hey everyone, welcome back to Kitco News. I'm Jeremy Szafron at the Vancouver Resource Investment Conference, I should say. And today we're joined by a legend. He's the chairman of Equinox Gold and also kind of a legend in the sector, right? Commodity space, we got Ross Beaty.
Only in my own mind.
Thanks for joining us. I'll toot your horn here. I want to talk a little bit about what you were talking about yesterday on the stage. I mean, this is a very active show. Yeah. Commodities seem to be in a very interesting place where there could be some corrections taking place, particularly in gold.
Could be.
Could be.
Are.
Have. They have.
Won't.
I hope that they continue to. Let's give the audience your macro thoughts on gold right now and where the sector's going.
Sure. Well, I'm a gold bull, I have to tell you. I mean, I'm so bullish on gold that really, after having retired from a big renewable energy company that I sold in 2016 or 17, I decided I had one more company left in me, and I decided to go big started a brand new gold company from scratch, trying to become one of the world's senior producers ASAP.
Yeah.
So I did that starting in 2018. It's now 6 years old. I also was the chair and founder of Pan American Silver, which became a really big silver mining company. But with Equinox being my last company, we're really trying to shoot big. And the reason that I want to go big is because I'm very bullish on gold. And when you're bullish on something that goes up in price, every day the value proposition gets better if you can build a significant producer. So we started out with nothing. Today we have 7 operating mines. We produced just under 600,000 ounces last year. We're building a huge mine in Northern Ontario called Greenstone, which is going to produce 400,000 ounces a year, one of the biggest in Canada. And it'll get us to the target we've got right now, which is close to 1 million ounces of gold and plus with other growth opportunities. So that's our mission. And, when you're bullish on the metal like I am, you expect that the equity price is going to rise with the metal price. So when we started Equinox, gold was $1,350, right, beginning of 2018. Today it's 2,000 and change. That's done pretty well. I mean, that's a good call. The thing that is crazy right now, bordering on ridiculous, is that the equity prices in the last year, they were doing fine for a while. They would track gold as they usually do. But for some reason, in the last, say, 15 months, gold and gold equities have just disconnected. And I have to say, in my entire career, I've been in this game for running public companies now for 39 years?
We won't say
Seems like a long time. Yeah. 39 years. I can't say that I've seen this in my entire career. Right. Typically you have cycles. We all know that this is a cyclical business. There are days to buy and there are days to sell. And right now you have metal prices trading at close to record highs like gold. The equities are trading to record low valuations, low price to asset value, price to gold price, price to production. It's nuts. Equinox Gold is a good example of that. Just in October, the gold price hit, I think it was $1,830. $1,830. Today it's $2,030, up $200. Equinox stock has gone down 20% since then. And
how does it make sense?
If anything, the fundamentals of the company are better.
Right.
Because we're closer to the finish line on our biggest gold construction project, a $1.6 billion construction of the Greenstone mine. On time, on budget, everything's going well. The rest of the company's doing well. The stock's cheap. So that's just an example of the entire market.
What's your reasoning behind that, though? When you look into it, the buyers aren't there, but... Yeah,
the buyers just aren't there. That's really the bottom line, Jeremy. Normally, it's true. If you leave a cycle which is a quantitative easing cycle and you tighten, interest rates go up, the gold price goes down.
Right.
If the US dollar gets stronger, the gold price goes down. Typically, and thirdly, if you're in an inflationary cycle, typically equity values go down. So we had all of those. But you know what happened? In that world last year, the gold price went up. Why? Because central banks around the world were the biggest buyers of gold as a store of value,
right,
as an alternative to the dollar. They get it. They bought hundreds and hundreds and hundreds of tons. And it wasn't just China who bought, I think, 600 tons of gold. It was Russia, Poland, Turkey. Like, I could just reel off the countries that went long gold. They're smart. So that's why the gold price went up so much.
Right.
And so going forward from today, you have equity prices. Everybody sold off the equities expecting the gold price to crater. It didn't. It went up. nowadays, you have to ask yourself what's going to change. Why this disconnect, which is the biggest, to me, the biggest weird delta I've seen in my career. It's either that the gold price will crash or equity prices are going to rebound. And I'm going to bet on the latter,
Right.
simply because I don't see what would change with the gold price going down much. I mean, likely, U.S. dollar is going to enter an easing cycle this year. Dollar will weaken a little bit typically. Interest rates will go down typically. We're through our big inflation cycle. Inflation's moderated and it's actually down now. That's helping out valuations across the board. So if anything, there's a very compelling argument for gold going higher.
Right.
And so somewhere along the line, and I'm going to guess it's going to be this year, don't know when the bottom is, but it's got to be close across the board. Of course, there's going to be every company is a bit different. There's going to be some kind of a trigger, and we're going to wake up like we did at the early part of 2016, again in 2021,
Yep.
again in 2009, again in 2001. Like all of these are big inflection points. And when we wake up and we're out of that bear cycle, boom, you get this beautiful pop. And people who sell making 5 or 10% on their money think they're very clever.
Yeah.
Believe me, the stocks will double.
Yeah.
They'll double or triple.
I mean,
just like we did then.
it's interesting when you talk to investors because they're almost wanting to be incentivized to hold a position, whereas in this market, you can't do that. So
No.
what's the advice out there? How do we educate?
The advice is to hold and buy.
Yeah.
It's everything's on sale. Pick your stocks, get a basket of them, not one or two, get a portfolio at all stages from, producers like Equinox Gold. It's the lowest risk, but it also doesn't have the reward potential that the higher risk companies do. Buy some junior explorers, buy some junior developers. That's my sweet spot. Typically, it's done really well. Junior developers
juniors,
that have
yeah.
assets that can be sold, but to bigger companies, that's a real nice spot to be in, because then you got a beautiful lift and a nice premium. And then like a handful of producers, because they're all going to go up. The tide coming in will float all ships.
Yeah.
Some more than others.
We talked a little bit about the evaluations and how low they are within the
Yeah.
equity space and commodities. When you're looking at juniors compared to, say, mid-tiers or even the bigger guys out there, why and is there a disconnect how difficult juniors are having access to capital right now?
Yeah.
I mean, it's really a crunch time.
It really is a crunch time, and it's part of the reason they're so cheap. And all I can do is say I haven't been in the investing side for quite a few years. I've been trying to exit and do a lot more environmental philanthropy, which is my big thing going forward. Because I'm kind of getting long in the tooth in this, and Equinox is my last big gold play, plus a junior called Lumina Gold that I think we're going to be able to sell fairly soon. So, I'm kind of exiting, so I haven't been really investing much. I got a happy ending like I did with Casino in December that Dundee bought it, and I'm going to eventually take those gains and roll them back into the market today, rather than just roll it into my environmental foundation that I usually do.
Yeah.
I just can't help myself.
Yeah.
It's just one of those times when, everything's on sale. It's a buyer's market, and I'm a buyer.
Yeah, and the opportunity is there to continue to support.
It's right now, and so those poor companies that are struggling, that have high overheads and drilling programs that are active, it's just a real tough time. My only advice to them is to try to pare down your overhead as much as you can, get through this,
Ride it out.
and when things change, they're going to change quickly, and you're going to be there, and there will be a ton of money available from equity investors for your space.
Yeah, good, well said. Let's talk a little bit, Russ, about Equinox, because yesterday on stage you were talking about how difficult it is to scale an operation up. It's capital extensive, obviously, and it's team heavy. How important is the team to the asset?
The team, there's a whole pile of things that are important, and it's a risky business, right? So there's so many things that can go wrong.
Yeah.
Even with the best team in the world, you can still fall on your face. The industry is replete with examples of that happening. And by the same token, even an idiot can discover a mine and make $1 billion.
Yeah.
I mean, it's just, that's also happened. It doesn't happen very often, but it's the nature of the business. So, everything in the middle, from the deposits that an idiot can't screw up to the deposits that a genius cannot make money on, everything in the middle is about management.
Right.
And I have to say, our team is just stellar. They're great mine builders, they're great operators, they're great explorers. It's just a really good team, and they're nice people. It's a pleasure to work with them. I really enjoy it.
Do you see that the retail audience has shifted in the past few years, obviously away from the commodities, but they're going after, these quick trades almost instead of the long term? So when you're looking at an asset, how important is it to be permitted? Like, what are the things that make you most bullish on that asset?
the quick trade success is always a bear market strategy. It's a trading strategy.
Yeah.
You know, some little bit of news, you sell, you buy back when it goes down. That whole strategy unwinds when you have a secular move, the way I expect it's going to happen this year. Secular move, you blow through that selling, and then it just goes up and up and up. And anybody who's sold is going to kick themselves for doing it. So that's, I think, what goes on when you have these big moves that are catalyzed by things that kind of just come out of the blue. It could be a black swan. It could be a bunch of discoveries. You know, this snowline discovery is so generational that, you know, it's going to attract a buyer in a big way. And that capital that people make from that trade will get redeployed into the market. And that kind of stuff is what builds the move. Or people get sick of the big seven on the New York Stock Exchange or the NASDAQ driving value in the US. They get tired of those, or they get toppy. They start selling it and they go down market. And some general investors look at, you know, with fairly good sized capital, they look at this whole space and they say, let's start buying.
Right.
And that's when things change.
Yeah.
That's what I'm looking forward to.
Interesting. In terms of commodities, has there been anything that surprised you this year? I mean, obviously uranium prices shot up.
Yep.
That could, again, be cyclical. But
Yep.
copper, supply and demand,
Yep.
where are we at with them?
Well, copper is a great metal. You know, my favorite three metals are gold for sure. Silver, certainly. Silver is a great, beautiful, beautiful metal, and it's in demand right now. It's a good, solid metal. I like silver. I don't have the same bullishness of silver that I do for gold, but I do have bullishness.
Which is so interesting because usually they should move together.
Well, they do move together to a degree, but silver's always buffered by the fact that it's an industrial metal as well. So by the same token, you can have no movement in gold, but if you have movement in the base metals, silver's going to move with that.
Right. So
it's sort of in the middle. It's sort of I always call it a schizophrenic metal. And then you have the classic base metals, copper, you know, zinc, lead, those sort of metals. But copper is, for sure, I mean, everybody, if they have a mining portfolio, has to have some copper exposure. Yeah. Copper is a really good metal. It's got solid strength across the board. They call it Dr. Copper for a reason. It follows the general economy. But it also these days is the most important metal for the energy transition.
Makes sense.
Most important. It's more important than nickel and cobalt and lithium, all of them. Why? Because it's used not just in storage, like all those other metals. It's used in transmission and generation. Right. Wind farms, solar panels, they all use a huge amount of copper. Transmission, copper lines, end use, batteries, motors, you name it, has copper. So it's a great metal. I'm not saying copper is going to go to the moon. Right. It's actually, copper price is $3.75 right now. Not bad. Yeah. Copper companies are making some pretty good money. Yeah. But, and there's lots of copper around. There's no shortage of copper in the world. There's lots of copper. So I don't think it's going to do anything crazy, but it's a good metal to be in. And copper explorers are going to do well. Copper developers are going to do well. It's a good metal.
You talked about that green energy transition. I'm curious how important that is going forward with some of your companies. I mean, you're involved in it in your own time, but what has the evolution been like on this side? I mean, people are investing into it.
Yeah.
Is it there?
Yeah. So first of all, you mentioned uranium. I mean, all of these metals have had a ton of hype around them.
Right.
And typically the hype is promoted either by smart people who have an agenda, like promoters of mining companies or exploration companies. Have to kind of take a little bit with a grain of salt on what they say. But more importantly, it's promoted by a bunch of people who just have no clue about the mining industry.
No idea.
Economists, that'd be number one.
Yeah.
Global economists, yappity yap on demand side, they don't have a clue about the supply side.
Yeah.
Politicians, same thing. Oh, we need 5 times more copper in Canada. Let's go and develop copper mines everywhere. We need 35 times more lithium and 65 times more rare earth elements. It's just not going to happen. They don't have an understanding of the fact that it takes you 20 years to go from discovery to operation of most mines. It costs billions and billions of dollars, and today there's no money for the junior sector. Yeah. So forget it in terms of aggressive development in a way that would bring on too much supply. It's just not going to happen. And the other thing is demand won't be there either. We'll substitute, we'll economize, we'll have new technology. Yes, there will be healthy demand, but it's not going to be insane. And it won't be anywhere near what those so-called pundits prognosticate.
There's lots of those.
But there's lots of them, and what they lack is a knowledge of the mining industry.
Right.
When you're very long in the tooth like me in the mining industry, you know, you just know how the game works. You know, I've seen cycles, like 4 or 5 big cycles in my life, and you know, it's a wonderful thing to be on a bull run. Yeah. It's a glorious thing if you're exposed, if you're long. But typically, an awful lot of people are exposed and forget to sell when it's at the top.
Right.
And then we ride this horrible time down. But the happy times are when you can go in and you can actually, almost with just about any investment that's reasonable, make money.
Yeah.
I think that time's coming.
It's interesting, you know,
Across the board.
Across the board?
You know, almost across the board, because we've had these incredible corrections in lithium stocks, cobalt stocks, nickel stocks, rare earth stocks. And you're likely to see that kind of flattening and improve off of a low base. Copper's solid, silver's solid, gold's really solid. That'd be my kind of trade.
It's interesting with the evaluation so low on the junior side.
Yeah.
Some people would say, okay, maybe some of the larger companies can come in and do some acquisitions here and consolidate the market, but it's so low
I know.
that nobody wants to make those deals happen.
Yep. And the other thing that's happened in the, well, what sector or what commodity do you want to talk about? I mean,
let's do gold and silver.
Okay, gold and silver. There's so few large companies now. They've consolidated a lot. You know, Newmont now has consolidated. Newcross was a huge company. Goldcorp, huge company. So there's 1 out of 3 that used to be buyers. Now there's 1. Equities done a lot of acquisitions. It's grown by acquisition. They're smart acquisitions. It's a great company, but it's got a lot of stuff to digest. Barrick has been out of the game for 4 years, 5 years. Just hasn't been there. I'm not sure what they're going to do.
Yeah.
I just don't know. You know, Mark Bristow has a certain strategy, and you know he's a smart guy. We'll see what happens there. My guess is Barrick's going to do something in one of these days. It might be in gold, it might be in copper. We'll see. But there's just not that much deal activity than there could be.
Right.
I expect it's kind of like a bit of a pent-up dam. It will come. The one aggressive company that I've been closely involved with has been Pan American, which bought Tahoe a few years ago, and bought just recently sold up Yamana, a large acquisition, but it hasn't gone anywhere.
Right.
I mean, if anything, investors have punished it for doing that. So you've got all that dynamic. So it's kind of hard to say what's going to happen with the large company, small company, you know,
That
buy, sell kind of a
dynamic
thing,
is just,
dynamic.
yeah.
But I can tell you for sure that the thing about this industry, because it's non-renewable, right? Every single day, mining companies eat their future. Every day. They must replace it by one of 2 ways, discovery or purchase. Most of them are not discovering very much. It's hard, it's risky, takes a lot of time. They're doing it the easy way. They're going and buying companies. Yeah. So that's what Dundee did with Lucino. You know, I've had all sorts of happy endings on that kind of a deal. Yeah. And I'm expecting Lumina Gold, for example, which is the one I'm most actively involved with. It's a huge copper. It's copper gold. It's mostly gold, a little bit of copper. In enormous deposit in Ecuador. It's 20 million ounces. You know, that's a good example. Yeah. It has an ore body that's gone through a pre-feasibility study. The company's doing a feasibility study right now. Its market cap today is around 150 million Canadian. It did a pre-feas a couple of years ago that came out with a $2.2 billion US net present value at $1,600 gold. It's just do that arithmetic.
There's nothing.
I'm telling you, it'll produce 300,000 ounces a year for 21 years, $600 an ounce operating costs, all inclusive costs. So that's just an example of the value proposition you have today. Buying that kind of company, you can't get any lower risk than that. Yeah. Yes, Ecuador could blow up. Yes, gold price could collapse. Yes, you know, turmoil could happen, but it probably won't. Yeah. We've had lots of turmoil in Ecuador. The project's been going along perfectly. There's no fatal flaws. Just there's 50 companies here probably. 30 of them offer great value propositions.
Interesting.
It's just one of those times in the market.
So is it due diligence, and I'm going to leave you at this because I know you're a busy man, and everyone wants to hear from you today, but I'm curious if you were speaking directly to investors and educating them right now that look for guidance in this space, what do you say?
I actually am speaking to investors today because I think it's, you know, I haven't done an interview like this for a number of years, and I just thought, you know, this is a good time to just tell people my conviction. I don't care if they buy or sell or do nothing. It doesn't matter to me, but I really believe that it's a great time to be buying. And so any of your audience, if they're investors, you know, I could just advise them from my own experience. You know, I might be wrong. Might be, you know, everything I said might be crazy. But in my experience, a time like today is really a golden opportunity to make money in this equity business, in this business of junior resource companies, copper companies, across the board almost, especially gold, silver companies, really there's really good value. And I expect a year from now, maybe I'll come back and I'll say, you can ask me, how do we do?
Love it.
Because I'm actually going to be investing my own money as well right now.
Right.
Something I haven't done for 4 years or so. And we'll see how we do.
There's a reason you're walking around here. I'm going to hold you up to that next year. We'll see how you did.
All right.
Ross Beaty,
Sounds
thank
good.
you for being on.
Thanks very much. My pleasure.
Thank you for tuning in. I'm Jeremy Szafron with Kitco News at the Vancouver Resource Investment Conference. Can't believe I'm having a problem saying that today.
Big word.
We'll see you next time.
Kitco News special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.